All right, deep divers, welcome back for another deep dive. Today we're tackling something that I think a lot of people are curious about. Even if they aren't into investing, we're talking about crypto. And specifically, those wild price swings that crypto is kind of infamous for.
Yeah, definitely. Infamous is a good word for it.
You know, you sent in some great research for this one, including this article titled, What Causes Cryptocurrency Price Changes and Drops? Important insights.
Oh, yeah, that was a good one.
It is, and we're going to get into that. But really the goal today is to try to demystify crypto volatility a bit, see if we can actually make some sense of it.
Well, and you know what's interesting is even if you have zero interest in ever, buying or selling crypto, like even if that's just never going to be you, I still think understanding like the forces at play behind these price swings, it can actually teach you a lot about economics, about psychology, even about the future of like money itself, potentially. I
think that's a really good point. Like this stuff is kind of, whether we like it or not, it's becoming more and more a part of like how the world works.
It is, absolutely.
So it's worth wrapping our heads around. So let's dive in. Now, the article, it mentioned this idea of supply and demand a lot, like as a core driver of crypto prices.
Yeah.
Are we talking like basic econ 101 here?
Yeah, exactly. It's like, it's the same forces that determine the price of, literally anything else you can buy or sell. Like if you think about it, if more people want to buy something and there's only a limited amount of it available, the price is going to go up, right?
Right.
Yep.
Right. Like if everybody wants those limited edition sneakers.
Exactly. Yeah. Like limited edition sneakers or like a rare, baseball card or something.
Yep.
The price gets driven up because there's so much demand, but there's only, limited supply.
Makes sense.
And the opposite is also true. So if suddenly there's way more of something available than people actually want, the price is going to drop because sellers are trying to, get rid of it.
Okay, so it's this constant push and pull between these two forces, right?
Yeah.
But when it comes to crypto specifically, what are some of the things that can really tip the scales one way or the other?
Well, I think one of the biggest ones, and this is something that the article highlights, is news, right?
Oh, for sure, yeah.
The crypto market is so sensitive to news. Like any little headline, it can send prices soaring or it can send them, plummeting.
Yeah, it feels like it's way more reactive than like the stock market even, right?
It does, it really does. And I think part of that is because, crypto is still relatively new, right? Compared to the stock market, which has been around for centuries. So there's still a lot of uncertainty.
Right.
And that uncertainty can breed, both like wild optimism, but also like, pretty intense fear as well.
That makes sense. It's kind of like the Wild West out there.
Yeah, it really is.
So give me some examples, like what kind of news specifically can really move the crypto market?
So, I mean, on the positive side, if you have a big company like, a Tesla or something, and they announce that they're going to start accepting Bitcoin as payment, that's huge, right? Because it's like, okay, this is becoming more mainstream. This is becoming more legitimate.
Yeah.
And so demand for Bitcoin goes up and the price goes up.
Right.
But then on the flip side, you could have like a government come out and say, hey, we're cracking down on crypto. We're thinking about banning it.
Yeah.
Or you could have, a big crypto exchange where people buy and sell crypto and they get hacked and suddenly, millions of dollars worth of crypto are stolen.
Right.
And that can create a huge wave of fear and panic selling and prices can plummet.
It's almost like an emotional reaction.
It is.
More than like a, reasoned, okay, well, let's just wait and see kind of thing.
Right. It's very much driven by sentiment and emotion.
Which is fascinating. Okay. Like you mentioned governments there, and the article actually talks a lot about how, different countries are approaching crypto in very different ways. So can you unpack that a little bit for us? Like how do government policies and regulations affect crypto prices?
Yeah, it's huge, right? Because governments, they have the power to really influence how easy or how difficult it is to buy, sell, trade, hold crypto. And that can have a huge impact on prices.
Right.
So for example, if a country comes out and says, hey, we're putting in place really strict regulations on crypto, we're going to make it really difficult for people to trade it, that's going to scare off a lot of investors.
Right. It's like a red flag.
It is, yeah. It's a big red flag. And it can cause prices to drop because people are like, oh, this is too risky. I don't want to get caught up in this regulatory mess. But then on the flip side, you could have a government come out and say, you know what? We're really embracing crypto. We see the potential here. we're going to create a clear regulatory framework. We're going to make it easy for businesses to operate in the crypto space. And that can actually attract a lot of investment.
Boost confidence?
Yeah, it boosts confidence, and it can drive prices up because people are like, okay, this is a place where, crypto is welcome.
It's legitimized.
Exactly. It's legitimized, and I feel safe investing here.
Right. So it really does. It's like a global game of, policies and regulations almost.
It is.
That are all kind of influencing each other and influencing the market.
Yeah, absolutely.
Okay, so we've got news, we've got governments. The article also mentions another factor that can play a role in all of this. And this one kind of surprised me. It's the global economy.
Yes.
Like, how does that affect crypto? It seems kind of far removed.
Right. You wouldn't necessarily think about it. You think about crypto as this digital thing that's separate from the real world. But, the reality is that everything's connected, right? And so when the global economy is doing well, people are feeling confident. They're more likely to invest in, things that are perceived as riskier, like crypto. But then when the economy is struggling, maybe there's a recession or there's high inflation. People tend to get more risk averse, and they might pull their money out of crypto.
Oh, interesting. So they're fleeing to, I don't know, more stable assets.
Exactly. Yeah, they might go into bonds or gold or something that's seen as more stable.
Right, a safe haven.
Exactly, a safe haven. But then there's this really interesting kind of counter argument, I guess, which is that some people actually see Bitcoin specifically as a hedge against inflation.
Okay, wait. How does that work?
So the idea is that because Bitcoin has a limited supply.
Right. There's only 21 million that will ever exist.
Exactly. And that number's fixed, right? So you can't just print more Bitcoin like you can with, US dollars or euros or whatever. And so the thinking is that as inflation erodes the value of those traditional currencies, Bitcoin might actually hold its value better or even increase in value. Because it's scarce.
So it's like a digital gold almost.
Exactly. That's the analogy that a lot of people use.
Interesting. So in that case, a bad economy might actually be good for Bitcoin.
Potentially, yeah. I mean, it's still very much a theory.
Right.
And, it hasn't really been fully tested yet, but it's an idea that a lot of people are paying attention to.
Okay, that's super interesting.
Yeah.
I would never have thought of that. It's like, it almost makes crypto seem more like a legitimate part of the financial system.
It's starting to play a role in the larger, global financial picture, for sure.
Okay, so we've got news, we've got governments, we've got the global economy. Anything else we should be thinking about when it comes to what influences crypto prices?
Yeah, well, I mean, we can't forget about the technology itself, right?
Right.
Because at the end of the day, cryptocurrencies, they're built on blockchain technology.
Right.
And so as that technology evolves, as it improves, as it becomes more, secure, more scalable, that can also have a big impact on prices.
Okay, give me some specific examples of that. Like, what kind of technological advancements can, move the market?
So, I mean, one example would be, improvements to security, right? If a particular blockchain has a history of being hacked or being vulnerable to attacks. And then they come up with a new technology, a new way of doing things, that makes it much more secure.
Right.
That's going to increase confidence in that crypto, and it's probably going to drive the price up.
Right.
Or you could have a major upgrade to a particular blockchain. Like, for example, Ethereum, a few years ago, they switched from a system called proof of work to a system called proof of stake.
Yeah.
And that was a huge deal because proof of stake is, it's a much more energy efficient way of securing the blockchain. And so it's seen as more kind of environmentally friendly. And it also allows for faster transactions and, lower fees.
So it was seen as a good thing overall?
Yes, it was seen as a very positive development for Ethereum, and the price, did very well after that transition.
Okay, interesting. So that's a good example of the actual tech underneath really impacting things. But I'm guessing the opposite is also true. If there are technological setbacks, security breaches or failed projects, things like that, that can also have a negative impact.
Oh, absolutely. Yeah. If a blockchain is, if there's a major hack and, millions of dollars are stolen, that's going to erode confidence and it's probably going to cause the price to drop.
It's like that news cycle we were talking about.
Exactly. Yeah.
Negative news about the underlying technology can be really bad.
Yeah. And I think, one of the challenges with crypto is that it's all still very new. And so there's a lot of experimentation going on. There's a lot of, trial and error. And so, some projects are going to succeed and some projects are going to fail.
Right.
And that's just kind of the nature of any new technology, really.
So it's a bit of a gamble.
It is. There's definitely a higher level of risk involved, yeah.
Okay, so it sounds like when it comes to crypto volatility, there's no easy answer, right? It's this complex interplay of, news and government policies and the global economy and the technology itself, and probably a bunch of other things we haven't even talked about.
Oh, absolutely. Yeah, we've barely scratched the surface here.
Well, hopefully, even scratching the surface, hopefully it's given people a little bit of a framework for understanding like why these prices move the way they do, even if we can't predict them.
Exactly.
Exactly what's going to happen.
Yeah. Right. And I think, the takeaway is that even though it might seem random and chaotic, there are reasons behind those price movements.
Right.
And if you can understand those reasons, it can help you make more informed decisions, whether you're investing or not.
For sure. And it actually makes me think about like the bigger picture. They talk about Bitcoin as a potential hedge against inflation. And like if more and more people start to see it that way, what does that say about our trust in the, traditional financial system?
That's a really good question.
That's a whole other deep dive we could do.
Yeah, definitely.
But it's something worth thinking about for sure.
It is. It raises a lot of interesting questions about, the future of money and the future of finance.
Well, on that note, I think we'll leave it there for today. But, as always, deep divers, keep exploring, keep asking questions, and we'll catch you on the next deep dive.
Sounds good.